Yo, what is good, family? Hope you all are having an amazing day. In today's video, we're gonna break down the setup from the Frankfurt Open on Eurusd. So let's kick it off. Basically, as always, we start the Frankfurt Open at 8 a.m. Madrid time. Basically, we jump into the charts at 7:55. And the first question, as always, is where are we coming from? We're coming from this bullish structure. So the first step is to say, all right, let's mark that up. We have low, high, higher low, higher high, higher low, higher high. We can see the detail that this high is higher than this high. So in reality, the structure is like this: low, high, higher low, higher high, higher low, higher high. Perfect. The open comes, we mark up the last high, we mark up the last low. Now let's see. For the high, it is a higher high. Therefore, we will be looking for a rule of the third impulse. Do we have less than 3 impulses? We have 1, we have 2, we have 3. So this will be an entry to the 4th impulse. Therefore, it's not valid. Therefore, the bullish idea is completely ignored already. And now let's go for the bearish. This is a higher low. Therefore, we will be looking for a bearish break of a structure. Doesn't need any confirmation. So we will be setting up the bearish sell stop. Now, you have to be fast, because right at the open, look in the time span of 5 minutes, what happens? Market goes to the upside, breaks to the downside. We have to look at this detail, which is the same detail that we broke down this week. If you have not seen all the videos, I recommend that you go and watch them after this one. But basically, the detail right here is that the candle that makes the higher high makes the BOS, because after this candle closes, next one opens, goes higher and then goes lower. This high is made with the same candle that creates the BOS. Therefore, it's not a valid entry. Since we execute by sell stop, the same moment that market breaks the level, the idea will be active. I've been realizing after hundreds of executed trades with this strategy on Eurusd and Bitcoin that sometimes when price creates the high and then in the same candle makes the BOS, it is more probable for the price to then reverse, because that means that there is a lot of volatility. Sometimes it will play out in your favor, sometimes it will play out against you. It's not the best model of entry. It's not only that, but also when we have these type of scenarios, it is usually followed by a model that is better. Basically, it's more solid. So why taking a entry model that is basically less accurate, it has less win rate, and actually it's usually followed by a setup that has more win rate and a better expected value. It makes more sense, right? So basically, I missed out on that setup. Just have that as a rule of thumb for every single setup, that the candle that creates the higher high makes the BOS, or the candle that makes the lower low makes the BOS. If you have that type of setup, just miss it and look for the next solid setup, which can be a different BOS or a different rule of the third impulse. So when market does this, we ignore that trade. Fantastic. Now what do we have? We see the price taking the last higher low. And what usually happens when we have this? Let's imagine we have 1, 2, 3, 4. Let's say sometimes we have this. Market grabs the liquidity from previous higher lows, and now we have first impulse. We can take this in consideration as a second impulse. So if market from here, let's say that bearish BOS was a fake out and now breaks to the upside, that's a valid rule of the third impulse, because now we have 1, 2, entry to the third. So in that type of scenarios, we can set up a bullish rule of the third impulse. And that's exactly the same thing that is happening right here. 1, 2, potentially entry to the third impulse, because market is taking this internal higher low. Therefore, that will be already a valid bullish buy stop, a valid bullish rule of the third impulse. That's the first idea of the session. Now, regarding the shorts, this was the last significant higher low, not valid because of how the candle was built. Some people say, okay, I will just sell on the very next higher low. You can do that, but it's not the next solid setup. All right, it's the same thing. Let's imagine, all right, because right here the candle, I mean the structure is pretty lateral. Perhaps it's not clean for everyone, but let's imagine for a second that we have this. Let's draw the lines. This is always simpler. You have this clear bullish range, and now market changes the structure, goes up. Before making a higher high, market breaks this higher low. Fantastic. That's when the structure is changing. But now you cannot take this or this or this to enter at the market, right? You have to wait for the last significant higher low on the structure that you're looking at. So if we're looking at this structure, none of these higher lows are the last significant one. You can only have one last significant higher low, and right here was already broken. So none of those are valid. Now, if none of those are valid, we have to go to the next one, which is this one. Now, what about this structure? This is low, high, higher low, higher high. This is the last significant higher low on this generic structure. So if this one was not valid, these ones are also not valid. You have to go to the previous layer, what I call them layers, right? Because you're in this layer. None of those higher lows in this layer are valid, so you have to go to the previous layer, which is the previous one, right? So you could be actually selling with a sell stop right here when the market breaks this one, because now you're doing a significant break of the structure in this bigger trend. So if we extrapolate this as scenario, because right here is clean, right? But now if we go here, we have to make a bit more of effort. We have low, high, higher low, higher high. This is the significant range. Inside of it, we have all of this consolidation, but we can see that price at no moment breaks the low right here. All right, this is the last significant low. Market is never breaking it. All right, so we have this significant range. Inside of it, market is doing all of this. So we have this bullish structure. Market already broke the higher low, which is basically the same thing that happens right here. None of those are valid. All right, same as none of those are valid. Now you have to go to the previous layer. You were working on this layer. Now you go to the previous one, which is this, right? So this bearish BOS was the one that was valid, basically. Eventually, market goes all the way to the downside, activates the bearish BOS, breaks the significant structure, and then, you know, in a matter of like 25 minutes, market hits the exit. That's not the important part. The detail about this setup is the fact of the internal structure. When that internal structure is not giving you anything, you go to the previous layer and you see if you have something. Sometimes you will not have anything, all right? Other times, for example, you will have this type of S scenario, let's say, and you know, this bullish BOS. Let's say you're trading New York session, 2 p.m. is right here. You have the bullish BOS before. You even have the third impulse before the open. And let's say you are coming from here. Okay? Let's say you are coming from here. This is 2 p.m. You have already bullish BOS and bullish root of the third impulse in this layer. And you say, all right, I cannot do anything. But then you go to the previous layer and you realize, oh, I have 1, I have 2. I can set up a bullish root of the third impulse on that high because, yeah, I don't have anything on this layer. But if I go to the previous one, I realize that I have 2 impulses. I have 2 pullbacks. If market does this, I can buy on a bullish root of the third impulse on this higher high. Right, so always remember that if at the open of the session the internal structure is giving you anything, you go to the previous layer. Although it's bigger, it will give you a better setup even because it's even cleaner. You're not focusing on that smaller structure. So most of the times are pretty good. Not every single time. For example, last week we had a bullish scenario on the Eurusd with the biggest structure, and that eventually was an invalidation. So it's not like the holy grail, all right? But it's a detail, is another tool that you will use in these type of S scenarios when the internal structure is giving you anything, but the biggest structure, the previous layer, is actually giving you something valuable. And you have to be able to detect that. The best way is to actually practice this over and over and over. With this being said, family, remember that on the description of the video you have the link to my Instagram. Talk to my DMs, talk and ask about a spot that is free for you. On the private group of students, you will have access to the intensive course about this strategy. You will have access to the live analysis sessions that I do from Monday to Friday in English and Spanish, and also access to the private group of the market ideas with Forex, crypto, and all the rest of the markets. With this being said, family, see you all in the next video. Let's get it.